Hi, very good evening, everyone. First of all, I would like to wish you a very happy International Youth Day, which falls tomorrow, 12th of August. However, we are celebrating today on 11th of August. And this year, basically, we thought to aspire to inspire by giving some financial literacy knowledge to all of you. And for that, we have our expert, Ms Shweta Camma, who will be addressing the crowd today, and she'll speak about financial literacy, a lot more knowledge that you should gain in this direction to keep yourself financially strong and be an expert in this area. So with that, welcome, Shweta ma'am. Over to you. Please address the crowd now.
Good evening, all of you. When it comes to youth, you are the economy for us. So when I'll first introduce myself. It's been 23 years into the financial sector. I'm a corporate trainer. I run an NGO which works on financial literacy, where I'm running a project in Tihar jail with LGBT queer community in slum areas and on the blue collar staff of lot many corporates. When we talk about financial literacy, it is something which need to be taught at a quite young age in the school, in the home itself. Today, I'll be talking about how you'll be controlling your financial future. You need to be smart with your money, very first thing. You need to be wiser with your money. You should know your own money behavior. And there are two problems which are there with us. One, I earn less or I spend more. These are two different things. But as a youngster, you people are not able to bifurcate that whether you earn less or whether you spend more. Look, my need requirement is of 50,000 and my earning is 40,000. Then my problem is I'm earning less. My need requirement is 50,000. I'm earning a lakh of rupee and still I am living at the end of last month of my day hand to mouth or paycheck to paycheck. The problem is I'm spending more. So very first thing, check, personally check by your own whether what you're doing with your money. Money have an economical value, but we are emotionally connected to the money. So it's very important to revisit your relationship with the money. This program is completely from the perspective where I want all of you to create a financial wholeness in your life. Financial wholeness doesn't talk about tax saving. It simply talks about having the financial balanced life. And it doesn't just stabilize one aspect, many aspects. How we will achieve the financial wholeness? Money gives you emotional stability, mental stability. It provides you with the strength to take the firm decision. One lesson to all the youth, all the people who are attending the session, don't just earn money, make your money work for you. So one skill that is earning skill. All of you are working, that is your earning skill. I'll be directing you how to enhance your money management skill and how to enhance your wealth management skill. Fine. Going ahead next. I'll start with this. I'll speak in Hindi and I'll repeat it in English. Fine. This is a poem which says that कारज धीरे होत है, काहे होत अधीर, समय पाए तरवर फले, कैतक सींचो नीर. That means investment, things goes and grow with patience. Investment is the game of patience. Fine. ऊपर एक दोहा लिखा है, अपनी पहुंच विचार के कर्तव्य करिए दौर, तेते पाव पसारिए जैते लंबी सौर. This doha is very relevant on nowadays when you have EMI facility. Fine. This says live within your mean. Don't go beyond your mean. Don't overspend, because what you overspend, you're taking that money from your future self. And when you're taking money from your future self will pay for it. He will regret or she will regret. Nahi karna chahiye tha. I would have stopped myself. Not many times you feel, oh, I've done that expense. Nahi karna chahiye tha. Another thing why we need to be aware about our money and expenses is because the way we spend our money is completely changed. My mother used to go to Kirana shop. We do online grocery shopping. We get in a trap of 99. We end up spending more. You need to understand that as it is a digital era, the digital money is spent more as compared to physical money. When I used to go for shopping for clothes, I stay in Delhi. I used to stay in Model Town, so going to Ashok Vihar was the only way to buy new clothes, or Kamla Nagar. But now, anytime, 24/7, and then sales are on. Our parents never had these social media aspect, gadget inflation, but we have. We have social media influence. This is the biggest trouble with the youth. Oh, he is sitting in that car. I want this car. I'm a Marwadi. I'll give you one liner. Samundar pee ke muh sukha rakhna chahiye. Wealth is not what is being seen. The real wealth is what you hold within. That is very important. So you need to be wiser with your money, not miser with your money. So just see all these things, visualize what all you are doing with your money. So let's start with this big journey with small steps. I'll be not telling you to change all of a sudden, but maybe small steps can make a big improvement in your life. One homework I'm giving all of you. And if you want, you can share it also. I'll share my mail ID with Ankita. Give me those letters. Write a letter to your money. How you're treating your money. Fine. It's very important. And write and name money. Like, let's say I name money as Lakshmi. Dear Lakshmi, I'm spending you like this. What I want from you. The way you write a letter to your loved one. Fine. Write it. And trust me, it will be a very good exercise for you and a good eye opener. Then second, start a Japanese technique, kakebu. If I talk about I'm sure many of you have seen that cartoon Shinchan. Shinchan's mother used to keep the money in the envelopes. When I started reading about Japanese culture, there comes kakebu. Japanese people still spend more physical and they're more disciplined. What they do, they keep align themselves that this money is for my grocery, this money is for my outing, this money is for my investment. So they are very disciplined. Discipline yourself. Let's say I'll talk about Ankita. She planned that she'll go out twice in a month and a particular amount is assigned by her. Let's say in one visit, she completely spent the whole amount. Now, as a disciplined person, don't take out money from any other of the expenses. Once spent, done. Now, this month, she'll not go second time for the outing. You need to be disciplined. And that discipline will be attained by you only. Fine. Change the way you deal with the money. I have a 9-year-old munchkin. I give her pocket money. I give her 100 rupees. And she have to keep her 300 aside. When she keep 300 aside, then only I give her next pocket money. I am imbibing an autopilot mode in my 9-year-old. Save first, spend last. What all of you are doing who are sitting in this forum? You first spend and then you think what to save. And there is nothing to save because everything you spend. So change your relationship with your money. Fine. First, you need to prepare your mindset. Once your mind is set, everything is set. Change the way you deal it. So I follow a rule of 3-5-2. 30% to invest, 50% for my need, and 20% for my want. Whatsoever you earn, 30% you should invest for your future financial goals. That financial goal can be your retirement, buying a car, getting married, upgrading yourself on the education front. So you need money for that. 50% for your needs, the basic household needs. 20% for your wants. Lot many people feel 30% is really big to achieve. So I say start with the small step. And again, we call it in the Japanese term Kaizen. Start small. Okay, maybe you target out 5% today. then 10, then 15, then 30. Don't target 30 because वो हिंदी में कहते हैं ना 9 मन तेल होगा ना राधा नाचेगी. I'm not able to save 30%. I'll be never able to invest 30%. So don't target out 30. Start investing right away, right now, maybe even with 500 rupees. But invest every time. Stay on. That's important. So don't get scared. Very first thing, what she's talking about, the salary is not enough and she's talking about 30%. Start small, but start. Fine. And don't be an ostrich. Why I've taken this picture is ostrich is an animal, it's a bird. Whenever that ostrich is in danger, they dig, and the way he is doing. If we'll not invest, if our money will not work harder than inflation, the inflation will eat away our money. There are many financial uncertainty. I have 23 years of experience. I was born with a golden spoon in my mouth. When I was 24, 23, 24, my father's business completely collapsed. So I have seen an uncertain future in my life. Living paycheck to paycheck is not a right thing. And don't fall in a debt trap. Buy what is required. Don't buy what you want. If you want, check whether you can afford it or not. Debt traps are big traps. Recently, TV, some personality from entertainment industry committed suicide because of this debt trap only. Cost of delay. Rather than showing you over here, I'll show you cost of delay on the Excel sheet. And whatsoever I'm sharing, I'll be sharing it with Ankita. You'll be getting complete PPT. You'll be getting the complete Excel. So when it comes to cost of delay, bacha, this is the cost of delay example. Let's say I require 5 crore rupee when I retire. Fine. A 25-year-old Shweta, if she start investing every month to accumulate this corpus, she requires 3,400 rupees. But a 40-year-old Shweta, when she starts, she requires 33,000 rupees. Every year, when you delay for your financial goal, the amount which will go out from your pocket keeps on increasing. So don't delay. This is known as cost of delay, and you're not able to reap the benefit of compounding. That is the 8th wonder of this world. Interest on interest is compounding. So this is cost of delay. Start young. Maybe somebody says, Shweta, I don't have 3,000. Start with 1,000, bacha. As you grow, your salary grow, so that your investment can grow. And you know, biggest irony, as you grow, when your salary grow, you will find your expenses have grown. You have raised your living standard, but you have not raised your investment amount. So don't do that. If your salary increased by 10%, your investment should increase by 10% year-on-year basis. It requires a discipline. Investment is fruit harvesting, which requires patience. And nowadays, you kids are easy on EMI. What EMI? How much EMI actually cost you? This is loan amortization. Let's say somebody taken a house loan of 50 lakh rupees for a term of 25 years. The mode is monthly. The interest rate I have taken is 8.5%. EMI installment comes to 40,000. Every year when you pay, so I have given a bifurcation. When you pay, how much is the interest and how much is the principal? Very first year, when I pay this 40,000, out of which 35,000 will be the interest and only 4,000 will be the principal. This is for 25 years. You can change this calculation, do it plus and minus. You can calculate it by your own. This is quite handy Excel sheet. So if I'll go down and I'll show you after 25 years, what exactly went out from your pocket is this. You have paid 70 lakh, 78,000 as interest and 50 lakh rupees as a loan repayment. So if you're taking something on an EMI, calculate the cost. It's very important. If you're living in a rented accommodation, you're paying 40,000 rupees rental, then yes, this proportion is very good. So this calculation is basically to show you that how much a EMI have interest and principal. Initial year, it have more of interest, less of principal. And this Excel shows you a compounding magic. Let's say you invest 1,000 rupees for next 40 years. Now, what is 1,000? If me and Ankita go out for a movie in Delhi, I'll get the tickets, but I'll not get the full eating stuff. And if I'm going for a luxury sort of picture halls, then this 1,000 is not more than enough. Sometimes this 1,000 fly away from your pocket and you don't know where it has gone. So if you invest this 40,000 and I've taken the return of Sensex. Now, what is Sensex? So we have two exchanges in India, National Stock Exchange and Bombay Stock Exchange. Here the shares are listed. And very first thing, it is not a gamble. Share bazaar jua nahi hai. Anything which you don't know and you try your hand is a gamble. So the benchmark of Bombay Stock Exchange is Sensex and the benchmark of National Stock Exchange is Nifty. India's top 100 companies are known as large cap. India's next 150 companies are known as mid cap, and rest of the companies are known as small cap. So the return of Sensex is approx 15%. It started in 1979, bacha. From 1979 till date, we have seen subprime crisis, we have seen COVID, we have seen war from Pakistan, we have seen Asia slow down, we have seen India onto getting into the struggling part on finances. We have seen many scams also, Harshad Mehta scam, Ketan Parekh scam. Despite of that, the return is 15% on CAGR compounded annual basis. This 1,000 have grown to 3 crore rupees. This is the magic of investment. You know, investment world is very magical. And once you understand this magic, mark my word, you'll be investing more of your salary. You'll be evaluating the value. You know, when you shop, it is not that what value you're giving at that particular point of time. Even the rest of the cost, like buying an expensive car, then the service, fuel, everything cost you higher. So don't just consider today's cost. Even when you're buying, consider the tomorrow cost which is attached to it. Coming back to PPT. I'll be sharing everything with all of you. So need not to worry. I've shown you how loan works. Initially, more of the interest. Later on, more of the principal. You know, one thing. Very first thing, all of you should accept that we need to change our relationship with our money and we need to embrace these changes positively. You know, we are scared of changes, but when changes are at micro level, it is easy. So let's start at micro level. Fall in love with this magic of investment, understand the money aspect, and be financially smart. Be financially smart. You know why we need financial plans, why we need all this, why our parents never needed it. It was a joint family mechanism. It was a closed economy. The purchasing power of money was good. Interest rates were way, very high. Now it is an open economy. It's a global economy. And the nuclear family structure is there. You need emergency fund. The requirement of emergency fund was seen very beautiful, very in the large manner in the time of COVID. Retirement. We need money for our kids' education. Inflation is eating away our money. Tomatoes are 200 rupees kg. Yesterday I was in Ludhiana. They were telling, ma'am, aap le aate. In Ludhiana, it is 250 rupees kg. So there are various financial goals which we have in our life, buying a car, supporting a family, children's education, marriage, nowadays marriage, okay, destination where marriage, weddings, retirement. I call it retirement as be on fire, financially independent retirement. And this is the magic of compounding. Not just fat accumulate, but money accumulate. But if you, the way we eat consistently and we get a belly fat, similarly, if we invest consistently, we'll get a good, not a belly fat, but a money belly with us. Fine. So it's very important to invest systematically. So abhi, whenever you munch a chips, na, remember the way I'm munching and this fat is getting accumulated, I should munch investment and make my money work for you. You should understand your life cycle. Phase 1 is when you're studying. Phase 2 is that phase where you actually start investing. But generally, as a mother, I say when your kids are small, you must talk about them money. You must give them pocket money and make them financially aware and literate and give them the habit of budgeting. And all of you should budget yourself. And when you do systematic investment in the phase 2, you'll be reaping the benefit of money in retirement, and even retirement phase you'll be managing the money. Aisa nahi hoega. In retirement you'll be okay, I'm retired now, my money work, I don't have to manage. No, you have to manage money. Something, a consistent relationship which is going to be there in our life till the time we are alive, and even after our death, the end ritual requires money. So let's start this beautiful journey. And there's a beautiful line to it, that safar khoobsurat hai manzil se bhi, because what I feel, every manzil, there is a next manzil to achieve, next destination to achieve. So let's embrace how to be financially free. And you know, you don't require a rocket science. You require a basic understanding. A question was being asked to me that with all expenses, with break even, can I achieve financial freedom? Yes, you can achieve financial freedom. You know how? The very first thing, start budgeting. You know, with the digital era, how the money flows out from the pocket. So in that very ways, start budgeting. Be aware what is coming and where all it is going down. Write down your expenses. That's very important. Now I'll be guiding you to create your financial castle. You know, when we build a home, we need the नींव. जो नींव होती है वो बड़ी मजबूत होनी चाहिए. The foundation of the house need to be very strong. Then only this financial castle will be very strong. So all of you require an emergency fund. You know why emergency fund? During COVID time, many people lost their job. Somebody got good lot of expense. So for initial starting, all of you should have 6 months of your monthly salary as an emergency amount in FD or liquid mutual funds. When I talk about liquid mutual funds, they are funds which invest in the bonds which have 90 days of maturity. Liquid mutual fund provide you with the instant redemption facility. That means if you redeem right away right now, you get 50,000 or 90% of your folio value there and then. But if your target should be your 10 months household expense, your 12 months kids fees, your insurance premium, and the EMIs which you can't compromise. The total of this amount should be there with you as a backup in FD and liquid mutual fund. I really want all of you to imagine, if you don't have job from today now onwards, how you will manage. Even if you think, you'll have goosebumps. So it's very important to prepare yourself for the uncertainty. When you're prepared for the uncertainty, you will not take haphazard decision with other financial money which you have invested for other financial goals. Take insurance, please. If I'll talk about financial independence and wholeness, have health insurance, have term insurance. Term insurance talks about that if an untimely death is there, the people who are dependent on you, they don't suffer on financial front, so they get the amount. Fine, take term insurance. These are the two. First is emergency fund. Second is insurance. Third is financially independent retired life. Now all the youth will say, oh ma'am, we are still start with the journey of our life. We're talking about retirement. पंजाबी में कहते हैं आंधी जवानी किसे न विखे, जांदी सबनु विखे. When you are younger, you don't realize, but when you go older, you realize. And I turned 40, I was thinking, oh shit, I'm 40. उसमें I have now turned 43. ऊपर से my little maestro, she's a calculator for me. Oh, I'll be, now I am 9, you're 43. When I'll 10, you'll be 44. She makes me count the number every time. So it's very important to visualize your retirement. The girls who are sitting over here, specifically all the women who are sitting over here, you know, we don't visualize our retirement. Why? Because my mother never did it. My grandmother never did it. This is the way. So it's very important to start an investment for your retirement and provide you with the tax benefit. You can have investments in National Pension Scheme, which is provided by PFRDA, and you get an extra tax benefit of 50,000 under section 80 CCD 1B. Visualize it and plan it and calculate. I'll give you 5 steps. Start. Today, all of you are starting for your financial journey. Fine. As you are not aware how to start with, you need seek help. To take a guidance of a trained financial planner who can actually guide you through how to walk on this journey, like the way we take the help of Google Map to reach to a particular destination. Fine. Start. Select, then start. Start small, irrespective. You say, let's say I have 1,000 rupees only. Invest. Start investing. Stay on. Keep on investing. That's important. Schedule your SIPs. And your surrounding matters a lot. All of you are talk about on financial fronts. Read financial newspapers. I'll not say do a drastic change, but start small and keep on investing. Tax planning will be a part of your financial journey, but don't invest just to save tax. Save and invest for your financial goal, and your financial goal need to be smart like all of you, specific, measurable, attainable, realistic, and time bound. After this retirement, all of you have different type of goal. Like in my life, I want to accumulate money for my daughter, for her graduation, for her post-graduation. Somebody wants to buy a house. Somebody wants to buy a bike. These are the financial goals. So write your financial goals. Write your financial goal. Calculate their future value in the context of inflation. Yes, inflation, because what you're spending today will not make you buy the same thing tomorrow. Because of the inflation, the purchasing power of the money reduces. So I'll give you one example on the Excel sheet. Just give me a second. So let's say the cost of education is currently 5 lakh rupees. This is cost of education, let's say graduation or something. The age of the kid is, let's say 2. Age of. What I need when he or she turn 18 for education. I'll say inflation, education inflation is 8%. Yes, I'll take it 8%. So I'll click and I'll use the formula of future value in this, where I'll take rate as 8%. I have 16 years to accumulate, to calculate that after 16 years, what will be the cost of education. Currently, the cost of education is 5 lakh. So when my kid turn 18 after 16 years, after 16 years, the cost of education is 17 lakh rupees. So now I should start investing to accumulate 17 lakh, not 5 lakh. Right? There are various asset classes where you can invest. The very first thing, you need a balanced asset allocation. There are various asset classes. The first asset class is gold. It can be a part of your folio, but net cannot be a only part of your folio. Why? Because gold works better when the adverse situations are there. Fine. Why we are more passionate about gold? Because based on 70s and 80s, if a woman husband die untimely and as she's not earning, her financial security used to be gold. So in that very case, that statement kam bure samay mein kaam aayega. Fine. Nowadays, you can invest in gold through gold ETF, that is gold exchange traded mutual funds, and sovereign gold bonds, which are issued by government. If you hold them till maturity, they are tax free. They provide you with the interest rate of 2.5% per annum. So how much of gold is completely an individual to individual personal financial goal, but it can be a part of your folio, but it cannot be the only part of your folio. Property. The prices of property are whoppingly high. The rental yield is pretty low. So even when you're studying about property and investing, you need to do your homework properly. When it comes to bank FDs, post office schemes, these are fixed income instruments which we are talking about. Fine. So which are fixed income instruments which we are talking about. So the interest rates keeps on changing. When it was a closed economy, we used to have interest rates of 12%. Now it's an open economy, and the interest rates are currently 6 to 7%. So you need to consider that your money need to work and run harder than inflation. I'll always say that none of the product is bad. Whether it suits to your requirement or not, that matters the most. By investing in an instrument which is generating a lesser return than that of inflation, I'll be not able to achieve the financial goal of my retirement. Right. When it comes to equity, stock markets, we have two exchanges, NSE, BSE. When you buy shares, you get ownership. Okay, why equity? I'll tell you the reason why equity. India is the 5th largest economy in the world right now. It is not just we, it is globally, the world is saying that you'll see India on 3rd. And I say I'll be seeing on 1st also. How your economy, I'll take it at a micro level, how your economic condition improve. When your salary increases, your economic condition improve. Similarly, how the economic condition of a country improves. When the income of the country improve, then the level of the country improve. So this GDP of from 5th largest to 3rd will be boosted with the businesses. In India is being the destination of investment to lot many global companies. FDI, foreign direct investment, come and invest in India. FII, foreign institutional investors come and invest in India, and they are investing in the growth story of India. So yes, when it comes to equity, this is completely my view. The asset class which can beat inflation is equity. But what is important is you must understand this asset class. It is not a casino where on a round table a ball will be moved and it will come on 9 and you'll get a bumper jackpot. It requires patience. You can have a direct investment in equity. You can have investment via mutual funds. When you invest directly in equity, I simply say that if the business is good, the business is strong, company is growing at a good rate, they are innovating themselves with the changing scenario of the markets, the balance sheets are positive, you can buy that share. In a Marwadi, we say, Marwadi hai, hum kehte, dhanda acha chal raha hai to khareed lo. And when you buy a business, bacha, business never pays you upfront. It requires patience to business to grow. There is a company in Indian Stock Exchange which was traded at 20 rupees in year 2000. If somebody invested 2 lakh rupees, bought 10,000 share, currently that person is holding 4 lakh share and the value worth is more than 100 crore. But the question is, how many of us understand this asset class? Now, I precisely talk about equity as an asset class because all of you understand the asset class of insurance because your parents have invested. All of you understand the asset class of property and gold because your parents have invested. You keep cash because you have seen that in your family. But when it comes to equity as an asset class, that is the asset class which is not yet being convincingly invested by majority of the Indians. Very first thing, you should be convinced with the aspect this Indian equity market will grow, but it will grow with the thing that I require patience. I require patience to invest. And you know why people are away from the markets? Because my older generation, when they invested during the scam of Harshad Mehta, and that was a phase when open economy happened, when actually they were supposed to invest in the Indian equity market, they got scared from that scam and they get back to their home. It was very important to understand the changing scenario. I firmly believe on my Hindustan, where this Hindustan economy is growing, and this growth I'll be a part of this growth. Either I can start a business or either I can buy a business. So I prefer buying a business either by investing directly into shares or by investing into equity. You need to have a balanced asset allocation as per your age, as per your risk appetite. You should look forward to the right solution. Like I've given on the screen for a lighter note, if you have a stomach ache, you can't go to a ENT. We've already talked about fixed income. They can be a part of your folio, but they cannot be the only part of your folio. So you must bifurcate your financial goal in 3 baskets: short term, medium term, long term. Financial goals which need to be achieved within 1 year are short term, 1 year to 5 year is medium term, above 5 year is long term. Why this tenure is important? Because longer the tenure, you can bet onto the equity investment, either direct or either indirect via mutual funds. Why they are shorter term, smaller goals, you need to look forward for the fixed income instruments or liquid mutual funds. The financial goal which you require from 1 year to 5 year in the mid, you can have the combination of equity and debt both. Equity as an asset class, I'll give you one more homework. If you want to understand the magic of equity, go back home, write all the companies which are using as a consumer, the paint company, the tire company, the car company, all company, and see how many of them are listed. You'll be amazed to see that you're the major consumer of all the products, but you're not the investor in those companies. I've already covered this. So financial freedom comes through investment. Fine. When it comes to equity, you can invest via mutual funds. Why mutual funds? Because they are the experts. You're working and you don't hold the forte to understand the complete up and down of the markets. So you depend upon to an expert the way you depend upon your barber for your haircut, your tailor to stitching your clothes, similarly to the fund manager. So in that very case, it is mutual funds. Mutual fund is a transparent structure. It provides every aspects of equity product to you, even debt products to you. They are completely regulated by Security Exchange Board of India. Fine. When you invest in mutual funds, you get units. The price of the unit is known as NAV. Fine. If you have invested and if you stay invested, this is one of the example that the investment done in 1989 would have grown to 50 lakh rupees in 2019, along with the growth of equity. So when it comes to mutual fund, you can even have a SIP of 100 rupee. For tax saving perspective, एक tax saving बताया आपको NPS, दूसरा tax saving mutual fund में है, that is ELSS, Equity Linked Saving Scheme. This ATC scheme is in the lesser lock-in period, that is 3 years. Fine. You invest, your money will be in a lock-in period of 3 years. You get a tax benefit of Section 80C. In mutual funds, you'll find a good lot of variety in equity. One is large cap fund, which invests in the top 100 companies of India. Mid cap fund, the next 150 company where this fund is parking the money. Then all the small companies come under small cap. Generally, I say, when you start swimming, you swim in the shallow water. You start investing, you should look for a buffet. That is diversified fund. Diversified fund, there are 2 types of fund, multi-cap fund or flexi-cap fund. Multi-cap fund and flexi-cap fund invest in all 3 segments of large cap, mid cap, and small cap. Then what is the difference? SEBI says to multi-cap fund manager, you need to keep 20, if you have 100 rupee, 25% in large, 25% in mid, and 25% in small cap. Where in flexi cap, SEBI says, keep 65% equity. That's all. Fine. So you can start your investment journey with the equity buffet of multi-cap fund or diversified flexi cap fund. Reap the benefit of the growth story of India by investing into equity mutual funds. Fine. That's very important. You can invest via SIP. What is SIP? Systematic investment plan. Mutual funds are low in cost, they are professionally managed, and they are highly liquid. When it comes to investing, if the scheme is in lock-in period, you can't withdraw. Otherwise, you can have a redemption easily. Because of the time constraint, I can't go into the detail of every product, but last product, which is the riskier in the equity mutual fund, is sectorial fund, where they invest in a particular sector. At the end, to enhance your knowledge, you can download the Sarthi app, which is a SEBI initiative, which is available in Hindi and English in the Play Store. Then I'll be providing you with certain links. You can download the content, and mark my words, these content you can make your kids also read. I give you a homework to watch Netflix ka The Minimalistic, The Less Is Now. On Netflix, Get Smart with Money. On Netflix, see Money Explained. Such a beautiful homework, na? At the end, what I can say is, don't cage your money. In Hindu Shastra, Hinduism, we worship Lakshmi. And we say Goddess Lakshmi is notorious. She don't want to sit at one place. So if you want to tame a notorious child, you need to keep them on work. So keep your Lakshmi ji working for you. Stay to your money loud today. Boss, money, you're going to work for me now. I will take care of you wisely today. You take care of me forever. Yes, it needs to be a give and take relationship. At the end, I can say, Prathme nirjita vidya, dritya nirjitam dhanam, tritya nirjitam punya, chaturtham kim kriyashi. Agar kuch galat bola to shama. It says, what can you do in the fourth part of life when you haven't gained the knowledge at while you were young in the first phase, when haven't you have dealt with the money in the second phase and the merit in the third phase. You need to be wiser with your money, and financial literacy is not a rocket science. Start reading a newspaper which comes on Monday to Monday. It's a wonderful newspaper that is ET Wealth. It's a wonderful newspaper on personal finance. With this, I end my session. Thank you.
Thank you so much, ma'am. That was really, really inspiring and very educating. I'm sure team would have gained a lot of inspiration, knowledge from what you spoke today. We have some questions from the team, which I would like to ask now. My first question is. In the theory of financial literacy and the living style of the middle class families in our country, what are the possible outcomes to be financially viable?
The very first thing, you start talking about finances in the family. You know, nowadays what we say, don't just match the horoscope of the people, but even match their financial habits. When we talk about financial literacy, it starts at home. I have a 9-year-old Munchkin. She invests her pocket money in mutual funds via me. So you need to understand the awareness, and yes, it is viable, because again, I said na, money is something which is having an economical value, but we are very emotionally attached to it. Budget it, talk about it. When you do budgeting, sit with the family, along with your wife, along with your husband, along with your kid, and take constructive decisions toward money, because when you're doing it together, it is easier to achieve. Start reading about it. You know what is our mind? जो देखना चाहता है उतना ही देखता है. If I'm a gym buff, I'm aware of what all gyms are there. Fine. If I'm a beauty buff, I know where all beauty products will be there. Similarly, you'll start understanding financial literacy. You'll be start reading more and more. Next question, dear.
So the next question is, does the break-even point of the expenses and the earning makes us financially capable in the turn of events? How to start saving at this point? So I'm sure a lot of people want to know. You have already spoken about small start
Yes.
saving with a small amount. So are there some products or probably some which all areas they can start with a small
Ankita, the beautiful product for you and for everyone is mutual funds. Because in mutual fund, you can have a sip of 100 rupee also. A small sip of 100 rupee. That ways, even for this, when I started, I've shown the calculation also. Mutual funds are the good product where you can start investing, budget yourself, bifurcate your money in three baskets: need, expense, and investment. I'll not say start with 30%, at least start with 5 or 10%. Once you see your money growing, you will definitely start to achieve more investing, right?
Thank you for answering that. I'll just take a pause and I'll request the team to just write their questions in the comment box that you can see on the right hand side. And I'll try to incorporate all the questions and ask the expert. And let's see if all the questions can be answered. So, with that, my next question, ma'am, is being financially independent, what does that mean in practice? A common family man has to have an exact amount of saving or any necessities that to be done, such as insurance, PF, etc. So what I understand from this question is that there are some basics. You know, all of us are working.
Yes.
Saving tax also is one of our major concerns.
Mhm.
So what are the areas where we can save tax on different
Okay.
slabs? Probably, if you can, throw some light on that, please.
Being financially independent means when I owe my time, I'm financially independent. That is financial independence, where I don't have to go to the job 9 to 9. And why? Because I need money for that. So for me or for anyone, financial independence is when you owe your time. When it comes to investing, which I've already addressed, but when it comes to tax saving, the section of ATC is of 1.5 lakh rupees. Fine. Where you should take term insurance. Term insurance protect the uncertainty if anyone dies at early, so the people who are dependent on him or her don't get financially deprived. When you invest in term insurance, you get ATC benefit. When you take health insurance, you get ATD benefit. Then you invest in equity ELSS. ELSS, equity mutual fund, can help you to achieve the financial goal. Yes, PPF can be a part of it, but depend on which goal you are assigning the money for PPF. Fine. So again, in the session, I also said that don't target tax saving. First, target your financial goal. Tax saving will fall in part with it. Invest for your pension, then you'll get an extra tax benefit of 50,000. Apart from ATC, 50,000 in NPS, that is National Pension Scheme, which provide you with the tax benefit. So you can do that also.
Right. Thank you for answering that, ma'am. My next question that I have from the team is, in the coming years, how to make a stability and also to be financially independent with inflation on the rise.
Have a PVR strategy, bacha. Preview, view, and review strategy. Hire a financial planner for you if you're not an expert, because you need a third eye view. The series which I told you how to watch is how to get smart with your money. You'll get your answer on that also. Fine. PVR is preview. Analyze your situation. View when you invest. Review. Keep on reviewing. That doesn't mean every year. Let's say, I have a newborn kid now in my house. Fine. So my financial condition, my expenses changes. My grandfather passed away. So he passed away long back. Just taking an example, he passed away. Now his expenses, medical expense has been reduced. So it is an ongoing affair that you need to keep on dealing with. Achieving financial independence the coming year, you need to go ahead with daily be smart with your money, invest regularly, understand the micro changes of yours which is happening, get advice with an expert. Don't do DIY. Nowadays, there's a good lot of trend of DIY, do it yourself. No, bacha, it's not possible. In mutual fund, there are 44 asset management company. There are good lot of product. There are so many insurance company. What product is right for you? And same with the stock markets. So please go ahead with the professional, take advice and start your financial journey.
Thank you for answering that, ma'am. I have another question from the team, which is the necessity of a passive income is the need of the hour. Any options and to how to overcome financial burdens?
Okay. Bacha, when it comes to passive income, you can have a passive income as a form of rental income. You can have a passive income as a form of dividend which you will receive from the shares you hold. Fine. Or the dividend you can receive from the mutual fund. So the very first thing you need to analyze, even when it comes to property, it can provide you with the passive income. What is required is a homework. Like recently, one of my friend bought a stressed property, and he bought it at a very good discount, and he is getting a rental yield of 8% and a passive income from that source. So you need to understand that how to visualize what all sort of passive income you can have in your life. Yes, you need to plan, and you can't have a passive income in a day. Ankita need a passive income. She need to start working on it and investing, let's say down to the year 10 year, down to the line. Now Ankita have bought one flat or one commercial property from which she's getting a rental income. She have accumulated some good stocks which are dividend paying. So now Ankita have a passive income of dividend. So you need to plan and invest and stay on with that and achieve your targets. Fine. And when it comes to financial burden, the very first thing when I started, I said you need to address the problem, which are two different problems. Either you are earning less or either you are spending too much. Generally, people take it as a one problem. They are two different problems. Financial burdens can be overcome by being vigilant towards how we are spending the money. Don't go with the flow. If you are and you know what is the big problem? They listen to us. If I said I need a pet dog food, everywhere I'll find the ad of dog pet food. That is another thing. Jo dikhta hai, bikta hai. So please control that craving of shopping also. Be smart with your money and spend systematically. Fine. Next
Perfect.
question, Bacha.
I hope this addresses the question very well. We have next question. Someone who is new to saving and financial management, what investment can give the best returns? Investing in gold, investing in property and renting, or something else for good returns in short time?
Okay, there is no good return in short time. Very first thing. If there is good return in short time, I wouldn't have sitting here. Very simple. Fine, it is being, when I was 18, I entered into this financial market. I'm 43. I've nearly completed 25 years into this market. Huh? But आज इस साल मेरा 25वां सालगिरह है मार्केट के साथ. So there is no shortcut to investment. Very first thing. Okay, when you are new to the investment, the best step is go with an expert. Go with the safer zone, that is mutual fund. Why? Because in mutual fund, you can invest in equity by a mutual fund. You can even invest in property by REITs, mutual fund REITs through mutual fund, and even you can invest in gold through mutual fund. But it depends on your age. If you are young, you have ample of time, then you should start investing in equity mutual funds, maybe with a small sip of 100, 500,000, depending upon to your pocket. I'll not say don't buy gold. Buy gold, but understand why you're buying. When you're buying a jewelry, bacha, you give making charges, purity. If you want to sell it off, those charges will be not paid back to you. So you need to understand that particular requirement, why you want to invest, for which goal you want to invest. I want to invest for my retirement, which is 40 years away right now. Invest in equity mutual funds from the longer term perspective. Visualize that I want passive income. So target to buy property in the coming span of year of time, which provide you with the rental income. If you understand equity market direct, you can start buying shares which can give you the dividend income. Homework is required. And if you have a if you don't do homework properly, you need guidance, then take a guidance of a financial coach.
Thank you so much for answering that, ma'am. I think my next question here was, is it right to take help of a broker to invest in share market? Is it risky? But I think you have already
No,
answered
I'll
that.
answer it. Ankita, I'll answer it. Let me answer. Bacha, when it comes to brokers, they look, when it comes to stock market, time was a constraint, so I haven't spoken about it. When it comes to stock market, there is cash market and there is derivative market, which is futures and options. Fine. Lot many time when people enter into the market, they enter as an investor. But then they start getting to know about futures and options, which is purely trade. And without knowledge, they enter and they start trading into that product and they end up burning the money. So if you're new to the investment and you're not aware of the equity market, again, my suggestion is mutual fund. Enhance your knowledge towards the equity market. Even when your broker gives you a tip that buy this or this stock, do your homework and then buy it. Going direct equity is also not bad, but you need to understand that whether you are capable enough to understand a stock at a price of 10 rupees more expensive than a stock at a price of 2500, because the company which is trading at 2500 is fundamentally very strong as compared to 10 rupees. Right? Chaliye.
Yeah,
और
I
पूछिए.
think that answers it very well. My last question here, ma'am, is that in your opinion, I mean, in everybody's opinion, now we are a little more educated. Do you want to throw some light on is it essential to include the finance model at a very school level or a basic level or a family front level?
Yes, very much important. The best example I'll quote: when you brush your teeth, you don't have to think whether I apply the paste on toothbrush or not. That means it is on autopilot mode. When it comes to financial literacy at a young age, when I'm teaching my 9-year-old that save first, invest first, and then spend last, I see a remarkable improvement in her habit towards money. And in fact, she understands stock markets also very well. I'll just share one example. We were going to Jaipur and she said, Mom, railway ka share listed. I said it is listed. So she checked how many people are using railway in Google. She said, Mama, 2.4 crore in one day, 10 in 10 days, 24 crore. And so on, the number increases. This is a profitable business. So, when you actually make them aware at the young age, they may become more responsible citizen. They become more responsible towards the money, because our mind is that भाई जितना देखना चाहता है उतना ही देखता है. When I show my kids about the understanding of finance at a basic level, she'll be understanding what is need and want. She'll not say that आपके पास card है ना, because card is not a magic. You earn, that's why you can swipe the card. So financial literacy and talking about finance is very important at a young age, at the house level, and it need to be included in the schools also. The links which I have provided you have books also which are designed for 5th, 6th, 7th, 8th, 9th and 10th standard kid on financial education, and there are a lot many other books also. Investments need to be in autopilot mode, bacha. All of you think before you invest. मतलब पैसे बचाना, saving and then invest करने में you really feel very trouble. But Ankita, when you spend, you don't think. You agree with me?
Absolutely.
But when I tell Ankita, Ankita, you have to take out 10% of your salary. Ma'am, I'll think first.
I have to think and I'll get back to you is will
So
be
this is
my
not
approach.
an autopilot mode with you. Why? Because while you were young, you were not, your base was not prepared on that ways. Whenever you have seen your parents, they have always talked about, okay, this is the household expense. Ghar ka kharcha itna hai. Even when you people earn, okay, I have to spend, I need this much money because this is my expense. You never think of, I have to invest this much of money because I need this in my future life. So it need to be at autopilot mode.
I think that addresses all the question. And thank you so much for joining, ma'am. Thank you very much for educating on all these various topics. I know subconsciously all of us know about it, but a refreshing of thoughts are actually needed at this point of time.
Thank you.
So with that, I thank you all of you to join the session. Thank you, ma'am, so much, and a very happy International Youth Day. I wish that all of you become stronger and aspire your goals. Thank you so
And
much.
happy Independence Day too, and let it be financially independent also. That's very
Absolutely,
important.
absolutely. Well
And
said,
thank you
ma'am.
for making me interact with such a lovely audience. Thank you. And I'll want to come more and talk about more in detail because अभी time कम दिया तुमने मुझे.
No, no worries, ma'am. We'll go back to the team. We'll ask them what specification, which
Yes.
area they want to hear more, and I'll definitely get back to you with some more feedbacks. And I'm sure this is a topic which is very vast, and experts like you can throw some more light in this area. So thank you so much. Thank you, everybody, and have a good evening.
Thank
With
you.
that, I'll just say goodbye. Thank
Thank
you.
you.